Stop loss. Stop loss order simply means an order by which a trader limits his loss. We can say that the stop loss is one of the most important options that is used in trading, especially if you are beginners. If the trader has decided to enter into a long position or buy position, a particular currency pair, he will set a stop loss below entering level in order to protect from unexpected drop in price. Or on the opposite side, stop loss will be placed above the entering level if he wants to enter the short position in order to protect against unexpected growth of price. In addition to the stop loss, traders often use the take profit order. With this order, traders take profits, or platform automatically close the position when the price reaches the desired level, which is determined by the trader based on his strategy or analysis. A take profit is always above the current price if the trader is in a long position. On the opposite side, a take profit is always below the current price when the trader is in a short position. And now we can move on to the platform to show you how to set stop loss and take profit orders. Since the stop loss and take profit orders are placed only when we want to play a position, you need to click on the New Order button. When we open a new window, first we choose the symbol with which we play. In this field is usually symbol of the graph which we have opened, followed by the volume box. In this field we entered lots, that means amount of money that we invest in our trade. They are followed by the field stop loss and take profit. For example, if we trade with currency pair US dollar Japanese yen and we believe that it will grow from current price, stop loss will be placed below the current price. If the current value of a dollar is 110 yen, as we can see, and we believe that it will not fall below 105 yen per dollar, then we will enter price of 105 in the stop loss field. And if we expect that currency pair will grow to 150 yen per dollar, then we will enter amount of 150 in the take profit field, and then click on the box buy market. If the price starts to fall and reach the level of stop loss of 105, position will be automatically closed and we will finish the trade with a loss. On the opposite side, if the price starts to rise and reach the level of take profit on 150, position will be automatically closed with a profit. Okay, this was the case for a long position, and now we will do the case for the short position with the stop loss and take profit orders. The principle is the same. Expect that the currency pair US dollar Japanese yen will fall. So if the current price is 110 yen per $1, and we believe that it will not go above 150, and we expect it to fall to a level of 105, in the field stop loss, we will enter the amount 150, and we will enter amount of 105 in the take profit field, and then click on the box sell by market. Now, if the price rises to 115, we will finish the trade with a loss. But if the price falls to the 105, we will achieve profit. We will click on the button New Order once more time to show the type field, which means order type. In a drop-down menu, there are two types of orders, and these are market execution and pending order. A market execution means selling or buying transactions at the current price, as we did in the previous two examples. Another type is pending order. Pending order represents a price above or below the current price from which the trader wants to get into position. Then, in field type, he must select the type of pending order, and then in field at price, enter the price from which he wants to activate position, and then click the button place. Also, as with market orders, you can set the take profit and stop loss. Trading with the pending orders will be explained in more detail in the next 2 lessons. Ask price. Ask represents a requested price at which a trader can buy a currency pair, while bid represents the offered price for the traded currency pair. The difference between bid and ask price is called the spread. In the MetaTrader 4 platform, on our chart, you can see a gray line and it represents bid price. If you want on the graph to display ask price also, and therefore see what is spread on the reporting currency pair, place mouse on the graph, click the right mouse button, and in the offered menu select the last option, properties, and then choose a common, and then choose show ask line. Ask price is shown as a red line on the graph, while the bid price is displayed with a gray line. Deviation, gray line of the red line, represents the spread.